Welcome, everybody, to the Mortgage Talk with me. Today, I'm here with Luz Peña. She is a mortgage professional, and I'm excited to kind of pick your brain today about, just what's going on in the mortgage world today. Looking at getting into the real estate market in 2025.
Yep.
The landscapes are changing, and there's a lot of people with mortgage renewals coming up this year. So there's definitely going to be, I believe, a lot of activity in the real estate world this year. And so I love to just kind of educate people and get them kind of on the right track and try to answer questions that people have just about that so that they can kind of make informed and educated decisions. And you and I are both the same in the sense of just making sure that people have the information that they need to make a good real estate move.
Absolutely. Well, hi, everyone. Michelle, thank you so much for having me. It's a pleasure, and I'm so excited for this. It is definitely going to be an interesting year. I think over the next 2 years, on our end, we're expecting it to be quite tumultuous. A lot of renewals coming up, and there's a little bit of frenzy in the housing market with interest rates and how it's going. And so we're excited. We're excited. It's not going to be a very positive bell curve, but I think we are prepared, and we want to help our clients make sure they get the right advice at the end of the day.
Yeah.
And that's the important component.
Yeah, and I do think that because there is so much noise going on in politics and Canada
Yes.
and the US and Trump and all those things, people kind of need to put their blinders on, I believe, and they need to look at their personal situation, their circumstances, and they need to make what's best for them, not having the outside kind of having a huge impact on their decision making. I mean, long term, it's gonna like what happens is going to happen, right? So you don't know what's going to happen in the long term, so you need to make a decision that's best for you right now in this kind of moment, right? So
I absolutely agree. At the end of the day, it comes down to how financially prepared you are, where you are in your finances, and is this the goal that you ultimately want to achieve, right? It's just like investing in the stock market. You can't
yep.
really wait for that perfect storm to just get in. You're constantly missing out on a key component if you wait by the sidelines.
Yeah.
Either the market is really great on house pricing, or either the market is really great on interest rates, or et cetera, et cetera. So whenever you have all kind of your ducks in a row and your eggs in a little basket that's sufficient enough to try to get into the market, then you want to try to explore that.
Yeah, so there's lots of people in the world, and I always say real estate will never be dead because there's always people getting married and having
Yeah.
babies. There's always people passing away, unfortunately, and there's always
Yes.
people having to transition from, a home to a retirement or a nursing home. So there's always going to be opportunity in the real estate world. And so for
Agreed.
those who are maybe kind of transitioning into from being a renter or maybe being at mom and dad's or with family to their first home. I know that a lot of people are in panic mode, parents thinking my kid is never going to be able to be a homeowner because of the way the volatility in the market and prices of everything and cost of living and all of those things. So when it comes down to being a first time home buyer, obviously opening up a first home savings account is always a key element to
Yes.
that, even if and you want to do that like well years in advance. You don't want to just open it up. Well, if you don't have one, you want to open it up right away. But even if you're thinking 5-10 years down the road, now is the time to open that. But
Yeah.
um the key, elements to getting a mortgage obviously is your credit score, your income. Those are the things that are going to be kind of reviewed. So what is your take on, as a first time home buyer, what do they need to really focus in on, and how can they kind of better their chances of becoming a homeowner?
Well, in my honest opinion, I feel that when you have clients that are looking to get into the market, uh, knowledge is power. The education component is key. One of the things that I do stress, whether they feel they're ready immediately or whether, they may be ready in 1 to 2 years, the best approach is to actually speak to a mortgage agent, mortgage broker to assess their current situation and understand what they need to do to improve their situation if they're not there yet.
Yeah.
There are some clients or borrowers that are far better than they think they are, and could potentially get into the market now, but because they're so worried about, oh, I haven't gotten this much funds and X amount of income, then I don't think I'm likely to do it. Meanwhile, if they just had a chat with us and did an assessment and figure out where they stood, they would either know, hey, you're actually able to do this now, or you're going to do this in the future. But
Yeah.
some of the components specifically that go into that, like you mentioned, are pretty standard. We've got your income component. Job stability is important here. So whether you're a salaried employee or a BFS, which is business for self at this point in time, it's very common nowadays. What you want to try to do is maintain consistency in what you're doing. From a business for self perspective, I understand the nature is you want to try to claim as minimal on some of what you earn, but if you have an end goal to purchase a property, then it's really important to try to maximize on the income that you're showing on your notice of assessment, your T1 generals, et cetera, et cetera. Second component, credit. You nailed it. This is something, unfortunately, that you don't get in school when you're in elementary or even high school, but having good hygiene when it comes to your debt management is key. Late payments, even if it's just within 30 days, but if you keep doing it, like every single month for 1 to 2 years, that catches up to you, right? And you can see it comes back on your credit score. Another big component that affects the score when it comes to credit is the utilization. So let's just say, for example, you've got 4 credit cards of 5,000 limit each, and you're pretty much at 90% on those credit cards monthly. That's really going to impact your score in a negative manner. So it's trying to manage it where you're maybe using 65% of the limit available to you and maintaining it below that on a monthly basis. It minimizes the utilization. It improves your credit score.
Right.
The third component is a big one for first-time home buyers. We're looking at the down payment, right? How much have you saved? Have you been able to save on your own? Are you getting gifted funds? One of the key components that we're seeing now is, yes, a lot of funds are being gifted, and that's perfectly okay, but it's just, where is the source of that gift coming from? Is it an immediate family member, or is it a friend, or is it a second cousin? Those relationships matter. Immediate family members are fantastic, but when it comes to extended family members, it gets a little bit more challenging for the lenders to be okay with that. And so we want to guide you, and this is why I'm a big proponent. Whether you feel you are ready now or not, if buying a home is important to you, talk to us sooner rather than later, because we're there to guide you and we want to prepare you.
And put a plan in place, right? So even if
Yes.
somebody was like, I do want to buy a house in the next year or two, coming to you with and kind of laying it all out, you're
Yeah.
able to kind of put a plan in place for them to
Yes.
say, if you want a home that is in the 5 or 600 range, you kind of reverse engineer that and you're able to say, here's the steps that you need to take in order to meet that expectation by that expected time frame, right? Like you're able
That's
to kind of
correct.
look at these things and say, and you can help them monitor their credit and monitor their debt load and those kinds of things. I think a lot of people look at mortgage professionals as people they come to when they're ready, which
Right.
people need to understand that if you lock arms with somebody in the industry like Luz, she's able to help you put a plan in place and guide you through that and kind of make sure that you're on the right track so that you don't kind of go off the rails and make those silly mistakes or those silly avoidable things that can hinder your buying power. So being able to
Yeah,
know that you
absolutely.
have somebody there to, just to help guide you. I know that I always thought that the only time you get into contact with a mortgage professional, this was a long time ago, was just when you're ready. But knowing that you can, reach out and kind of put a plan in place, and if someone comes to you and has a credit score of 500, you can coach them and kind of lead them through how are we going to improve this score so it's where it needs to be with your time frame and your timeline. I mean, regardless of buying a house or not, having good credit is always a good thing, obviously.
Absolutely, absolutely. And just to add a little bit to that, like for example, we are able to I sort of call this knowing when to push some levers or lower some levers. So, for example, depending on your application as we see it in one moment, you may have an extra 20,000, okay? And your gut response is, okay, let's put that as a down payment, okay? But then you have all this debt, and based on the application, depending on certain factors, it may actually be more useful to use that same 20,000 to pay off some debt rather than pay it towards down payment. It can mean the difference between the lender saying yes for an approval or not. So this is why it's important to make sure that you speak to someone beforehand, because they're able to give you insight about, if you have your down payment accumulated, et cetera, is it wise to put it all as down payment, or maybe it's more useful to put it on some of your debt that you carry.
Right.
Nowadays, everybody has some sort of credit card, et cetera, et cetera. So these are things that we can help guide you with, right? Making your money work for you the way it should long term, and ensuring that you get an approval. And that's the really awesome part of what I do. Like I'm able to get creative and help clients and see through the basic stuff.
Yeah, and I think too, like even young adults who are, I have a 13-year-old who'll be 14 this year, and I know he's far out from purchasing a home, but by the time he turns 18, he's going to have that first home savings account opened up and contributing to that. And just knowing what he needs to do in order to have credit by the time that you're ready to buy a house. Because there's sometimes some instances where people are first time home buyers and they've been great. Mom and dad have been very adamant to make sure that they don't accumulate debt, but they also realize that they don't have any credit because they don't have any credit cards or debt to build that
Yes.
credit score with, right?
Yes, yes, we definitely have seen that as well, and it's a fine balance. You need to have credit in order to be able to establish really great credit, and so that's where the hygiene and the responsible debt management comes into play.
Right.
And unfortunately, it's not something that our education system really nails down on when we're in elementary school or high school. And so this is why for us it's a very holistic approach, right? We don't just look at, hey, you're buying a home. It's like, let's take a look at everything else about your finances and make sure that you're talking to the right people, such as yourself as well, Michelle, in terms
Yep.
of how do we get you prepared. Having the first time home buyer savings plan account, maybe an RSP that you can use towards your first time home buyer, setting all those things up, and that's where someone like you comes in handy as well.
Yeah. 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 I was blessed to be able to go and get those licenses recently, just at the end of last year, because I feel it's so, so important that, first of all, I can not just take care of them in the real estate world, but I can make sure that they're, taken care of from a financial aspect too. And they already know, like, and trust me. So why wouldn't they trust me with, being able to help them financially kind of get set up, which I think is very important. And there's just a huge element out there of lack of education. And so
Yeah.
I am high on the education aspect, as you are, because they need this information to make good decisions. And if they're not being educated, they can't be smart with their finances or their real estate choices.
Yeah, agreed. This is why a support system from the onset is critical. Find someone that you can relate to, that you can talk to, that you can communicate with, and like have open-ended questions.
Yeah.
As a first-time home buyer, it's extremely essential for you to be able to talk through anything that you don't know and anything that you want to figure out. This
Yep.
is like one of the biggest responsibilities you'll endeavor and you'll get into. And so trying to navigate it and educating yourself as much as possible is key.
Yeah. And even with, so let's shift gears a little bit and talk about, we have a lot of people coming up with mortgage renewals this year. And this year and the next year, it's going to be pretty insane to see how it all plays out. Um, it'll definitely be interesting.
Yeah.
But so in regards to breaking a mortgage,
Mhm.
penalties, those kinds of things. I mean, obviously, if you're waiting until the date that your mortgage comes due, you're not going to incur any of those penalties. But sometimes you need to get into conversation with your mortgage person now, even if your renewal is in December, say, because now is the time to start planning what is the right move? How should I navigate this? Do you consider or do you encourage your, homeowners to start planning well in advance when it comes to that mortgage renewal?
Absolutely. Similarly to the first time home buyers, there's no difference there. As a matter of fact, with existing homeowners, you see that their debt loads for the most part do increase owning a home. And so it's important for them to be able to assess, okay, how is that going to impact me now? The gut reaction from most of our clients right now is, hey, I already have a mortgage with this institution. I'm just going to stay there. However, that's exactly what they're kind of banking on you doing, so that you're not really going out and exploring your options. The sooner you're able to talk to us, the sooner we're able to assess where you stand, and if you've got enough time to make those changes to get you out into a more favorable position or with a more favorable rate or institution that's offering you a product that's much more convenient or suitable for you, then the better.
Yeah.
Um, Again, like the lenders are counting on you to just be like, oh, I don't want to deal with this, I don't want to deal with that. But at the end of the day, you want to explore your options and make sure that you are getting the best product and service that you can out there. At the end of the day, you also want financial advice. And so working with us, you get that. You get that extra touch. We're here to build long-term relationships with our clients. This isn't a transactional thing.
Yes.
And so we do encourage that.
Yeah. And so, for example, here's a scenario. So, somebody has a mortgage renewal coming due. They have incurred several thousands of dollars in debt, which I think most people who are in this position this year and next year probably have incurred debt.
Yes.
And so maybe they have a large debt load and maybe they have bad credit now. When it comes to the renewal process and shopping around, I've talked to other homeowners who are hesitant because they were like, well, I've got so much debt now and our credit is no good. Like, we're going to be strapped with the mortgage lender or the mortgage institution that we have because I don't think we would qualify outside of what because when you renew with the same institution and stuff, it's usually the easier route, or so they make you believe. What does that look like in terms of when you're renewing and your credit isn't good, or when you've got a huge debt load that you've accumulated?
Yeah, we are obviously in an environment where finances are or have been taking a hit probably for the last 2 years. Um, Most people are feeling the pinch even more now, even though things are sort of uh, lessening and easing up a little bit. Like it's been 2 years of very challenging times financially, and so everybody's amassed and accrued debt for the most part. In this particular case, what I need to encourage people is to remember that their situation is very specific and unique to anybody else's. And so what may work for them isn't necessarily what, they'll read about on Google or online about, someone else and the rate that they're getting. They really need to focus in on their personal circumstances. When you have a lot of debt and you have poor credit score, as crazy as it sounds, we do have financial institutions that are able to assist. Okay. And now here's the catch. Okay. Those financial institutions, they come with a little bit of a higher price tag on the rate. Okay. And so people are like, well, no, I'm not going to do that. But what they forget is that, yes, they may be getting a semi low interest rate on their mortgage right now, but it's going all out the back door with these credit cards at 20, 25%, or all these high debt loads that if you actually amortize it, it's going to take them like 180 years to pay them off.
Right.
And so you need to bring logic to the equation. It's like, I understand that you don't want to see your interest rate for your mortgage at a price tag of maybe 5-6%. Okay. At the same time, we're in a position to now cover all these external debts because, maybe you have enough equity in your home, right? And
Right.
so we take your existing mortgage and we pay out all these debts. And now you have ideally one lump sum. Okay. Yes, it's a little bit of a higher interest rate. Okay. But you're going to get out of it within like 30, 35 years because that's the maximum that's allowed. Whereas if you continue just holding these high debt loads of like 20, 22%, you're never getting out of it. So you
Yeah.
have to shift your logic, right? And
Yeah.
on our end, one of the things that we like to do is we literally break down the numbers. It's
Yeah.
like, I understand that this is it's got a negative appeal or conception, but at the same time,
Long
you're
term.
actually paying so much more by
Yeah.
continuing to have these open credit cards and debts
Yeah.
you're just paying interest on. Like, and that's the thing right now, most people are in that position where unfortunately to make ends meet, it's just interest only, bare minimum payments, and these
Yeah.
credit card companies and high debt load companies are making the most of it.
Yeah. Yeah, they're definitely taking advantage where they can, and the thing is, I'm trying to advise my homeowners when they do renew and they are debt free and they're kind of free and clear and everything is kind of amalgamated in that one payment. It's like, do not do that again.
Yes.
Do not.
That's exactly it, right? And I mean, again, you do need to keep some credit for yourself, right? Obviously, our world functions on credit card and easy payment methods, and so that needs to be there. However, you need to start being more mindful about that, right? So I do encourage clients or borrowers who get into those situations is like, pay them off, but maybe also close some.
Yeah.
Not all of them, because obviously we don't want to negatively impact your credit score, but consider closing some. Like at the end of the day, no person really needs like 7 credit cards, 3 line of credits, and
Yeah.
a bunch of other things.
Minimize it
Let's
so that it's
no, let's face
manageable.
it, right? And especially with the credit cards, like as soon as you've paid them down, they start increasing your limit,
Yeah.
or suggesting you increase it. And
Yep.
so I've seen clients with credit cards of like 80,000, and I'm just like,
Yeah.
it's yeah, at 20
It's
at
just
20
that
22%.
temptation. Yeah.
Yeah, 20-22%. It's just like, it's yeah, it's
Yeah,
it's a powerful thing.
they have to be advised by a financial person to kind of give them the big
That's
picture
right.
because short term, having extra cash or, an $80,000, credit card that's got zero balance on it. Yeah, that cruise sounds great or that vacation sounds wonderful, but then you start doing that every quarter
Quarter,
and
yeah.
and in a year or 2 or 3 you're looking at a remortgage again because of, debt accumulation
Yeah.
yet again. So, yeah.
And that's the challenging part because, like the equity on the home doesn't necessarily increase
Yeah.
at the same speed that we spend. And so
Yeah.
you have to be very mindful of that, right? It's a
Yeah.
reality that's out there. And this is why I'm saying it's a holistic view for us, right? We want to make sure that you don't get yourself into those positions. And that's why, as part of what we uncover when we're working with clients, we refer to people as like, hey, I think you would benefit from a chat with a financial planner or someone that really knows, to make sure that we avoid this. Now that we've cleaned this up, let's make sure you don't get into that position again.
That's what I have. So with my, my financial background that I'm building now, I literally have a theme and it's called the fast forward mindset. And you have to have that kind of mindset where you're thinking fast forward 5 years. If I continue on this path, where am I going to be? Whether that be investing or whether that be spending. And it's going to
Yes,
have an effect on you regardless. So you need to have that kind of fast forward mindset where your future self is going to thank you for what you're doing and educating yourself and having the people in your corner like you and I to be able to help advise them in the best possible way for the best possible outcome for their future.
absolutely agree with that.
Yeah. So just to kind of close things up, what is your number one piece of advice for a first-time home buyer? And what's a number one piece of advice for somebody who has a mortgage renewal this year?
I think they're both going to be the same.
It's okay.
I'm going to say, don't fear educating yourself and trying to get knowledge, and just figuring it out on your own is not necessary. Like, you have partners like me and other mortgage agents that are responsible and want to make sure that we guide you properly. I'm going to say, talk to us. That's the key takeaway.
Yeah.
Talk
Make
to us.
that phone call.
Yeah, and just get familiar about what it's going to take or where you're at. Like, it's not the end of the world. We're not here to judge you.
Yeah.
We're here to help you. And so the sooner you come to us, the sooner we can put, like you said, a plan in place to make sure that you get there. And similarly with renewals, like, don't be scared about what your current situation is and how things have impacted, right? This is why we're in a great capacity. We deal with 20, 30 lenders. So we have at our disposal the capacity to be able to recommend suitable options to get you out of those situations, whatever they may be, or to improve your situations, right?
Yep.
Just don't get too comfortable and too relaxed. Like, make sure that
Yeah.
you are putting your finances at the forefront, and that means taking the time to ask questions and to figure, hey, is there a better option for me?
Yeah, and
There
shopping
you
around
go.
is key, right? And I think I look at this as you have absolutely nothing to lose and everything to gain.
Yeah,
You're not paying us to have a conversation with us to get the advice that you need. It's free advice that could completely transform your financial future in so many different
absolutely.
ways. So I'm super grateful to have you and your wisdom and talking about
Yeah.
mortgages. I
Just
look
remember,
forward.
with us, you don't have to shop around because we have access to all these lenders. So
Yes,
we're a
yeah.
one-stop shop. So
Yeah,
it's great.
absolutely. Well, it was great chatting with you, Luz, and I look forward
Same.
to our call in the future.
Thank you so much, Michelle. I appreciate
You're
you having me.
welcome. Thanks.